All right, so hopefully you did a great job on your homework for Chapter 2 and you didn't have any major questions. We had two homework problems. The first one is problem 2, and I have everything here, and I'll go over it category by category and section by section and maybe even line by line if I need to, in hopes that I answer any questions you might have. First thing is we have our assets, and of course our current assets are listed in the order of liquidity, and our total current assets are $61,000. If we had marketable securities, it would fall between cash and accounts receivable. In on-ground lectures, the first thing the students ask me is, are we going to have to list these in the order of liquidity? And the answer is yes. If you have a test problem on the balance sheet, you're going to have to list the current assets in the order of liquidity. So you will need to memorize that. And then we have non-current assets, and I put in parentheses PP&E, property, plant, and equipment, because non-current assets or long-term assets are generally our land, our building equipment, and then the depreciation. Going back up to current assets, if we did have an allowance for doubtful accounts, we would either have that right underneath accounts receivable, and it would be a negative, or we could have accounts receivable net. If it's consolidated, then it would just be subtracted out from accounts receivable, and because we have net in parentheses, we would know that we subtracted out our allowance for doubtful accounts. So if you look, we have our land, building, and equipment, and then we have our accumulated depreciation. When you see something in parentheses, that means that it's a negative number. So our non-current assets equal $1.4 million for total assets of $1,461,000. Going over to the liability side, we have our current liabilities, and they always start with accounts payable. I'm not so concerned about the order that you put these, or you list these on your balance sheet. But remember that we do have two mortgage payable accounts. We have a current one under current liabilities and a non-current one under long-term or non-current liabilities. And if we had to know how much we needed to pay our mortgage off today, we'd have to add those two numbers together. So the only non-current liability we have on this problem is mortgage payable. And then we have owner's equity, and because this is a proprietorship, we just have the gentleman's name who owns the company as G-Day Capital, and when we add all those numbers up, we balance out at $1,461,000. If you did not balance out, or you got different numbers and you don't know why after reviewing the homework, like I said before, email me or call me and we'll go over it line by line, and hopefully I can help you figure out where your errors are. All right, this looks really confusing. There's a lot of numbers up there, but again, we'll go over problem 5 line by line, and as we go over it, I'm going to try to review a little bit of our balance sheet and some of the questions that might be on the test. The first thing is we do have an allowance for doubtful accounts, and if you see, it's in parentheses, so it's subtracted out of our current assets. Our current assets are in the order of liquidity. Our balance sheet is not accurate. Some of those accounts aren't accurate. As an example, we don't know if somebody's going to pay us back or not pay us back. So we don't know if that allowance for doubtful accounts is exact, and we don't know if the accounts receivable is exact. And this balance sheet is just a snapshot in time. So when we go ahead and we add up, the other thing I want you to know is, as I said before, is there's gray areas. As an example, deferred income taxes. It's actually on here twice. It's on here as a current asset and as a long-term liability. You won't see deferred income taxes on your test. Okay, I believe the text explained that one was a current asset and one was a long-term liability, but again, I'm not going to challenge you on figuring out where that goes. Okay, so we have $262,000 of current assets when we add them up. And then we go to long-term assets, and we start out with investments, and then we have the PP&E with accumulated depreciation in parentheses. I told you before that if you have an investment, it could be short term or long term. You would know personally what that is on your own personal balance or on your own company balance sheet. If I give you investments, just assume them as long term. Um, and then when we go ahead and we add up our long term assets, we get $12,500,000. This one does have other assets. If you put the organizational cost up in long term assets, I wouldn't mark that wrong. I wouldn't consider that wrong on the test. That's one of those gray areas we talked about, and I will not require you to know that for the test. So if you had to ask me from this question, what should you know and what should you not know from the asset side? Of course, you need to be able to list your current assets in the order of liquidity. You need to know your contra accounts, and there's three major contra accounts. There's the allowance for doubtful accounts for accounts receivable. There's the accumulated depreciation for PP&E, and there's the treasury stock, which this one does not have, but that you need to know that that's going to be a contra owner's equity account. You're going to need to know what the difference is between your current assets and your long-term assets, and that's basically what you'll need to know from the asset side. On the liability side, you're going to need to know what liabilities are current and non-current. We have 4 current liabilities, which total $180,000. And then we have long-term liabilities. And I don't know why the book called it net of current maturities. That's just going to be long-term debt is what it would say on the test. And let's see what it says in the book. It just has long-term debt. So that net of current maturities title, just consider it long-term debt. I apologize. What I did is I actually took this from the answer key, and I didn't realize that they used a different account on the answer key than they use in the question. So under your long-term liabilities, that account name for the $9,920,000 is just long-term debt. And then we have deferred income taxes, and finally our long-term liabilities are $10,070,000 for a total liability of $10,250,000. For the owner's equity, we did have a paid-in capital in excess of par and our common stock, so we could have a total there of $1.5 million for common stock. And then we have retained earnings that gives us a total owner's equity of $2,562,000, and of course we balance out at $12,812,000. So as I said on the last question, and I've said on the first homework, if something on here just completely confuses you, or if you need some help going over it line by line, if you can call me or email me, preferably if it's a short answer you need, just email me. If it's a lot of help you need, call me, and if I'm not available, I will return your call, or maybe we can even go ahead and email each other and set up an appointment where we can both meet over the phone, where we're both available and we have the information in front of us so we can go over it pretty quickly.